Is the dollar about to crash? Is silver finally going to shoot higher? And are bonds done for? All that and more on Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today as we kick off. We got some new charts to go over this week. Moving averages, these are the colors on your screen. The 21 days in red, 50 days in green, 100 days in blue, 200 days in tan. Price is a general direction. Prices are headed. Momentum is the rate of change. A bullish indicator for both is positive, and bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where the sellers are at and support is where the buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction of the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's kick things off with the S&P 500, now upgrading to marketcharts.com to take a look at the percentage of S&P 500 stocks above their 50-day moving average, now currently sitting at 62%. And what's important to know is even though the S&P 500 made a new all-time closing high on Thursday, the breadth is weakening, meaning not as many stocks are making those new highs with it. So you can see the percentage of stocks in the 50-day in the S&P 500 above their 50-day moving average rose, which we would expect. But notice we're not seeing 80% participation here. We're seeing 62%, and that is showing that breadth is weakening. More importantly, let's look at the percentage of S&P 500 stocks above their 200-day moving average. Remember, if you're below the 200-day moving average, it's considered bearish, and we're seeing at 70%. If this continues to deteriorate, now you can look at it from the bullish standpoint and say, hey, this is really good because if these stocks start going, but from the bearish standpoint, if this is a sign of more to come, well, then this is actually a leading indicator saying that it's not saying that the stock market can't go higher. It's saying it can. It's just saying that that length of that move is going to be limited. And let's take a look at our price and momentum screens. We see price and momentum unchanged on the S&P 500, back above all the key moving averages. No surprise when you have a new all-time closing high. 1 month momentum remains negative and rising, unchanged there. Let's take a look at SPY. And what do we see here? New all-time closing high, got rejected kind of right where prior rejections are at. So this is still forming what we see as a sell zone. We can probably move our lineup a little bit to match that volume profile. We can maybe move the bottom one up, but we'll leave it alone for the moment. This is a sell zone down here. This is a buy zone. So this is where sellers are at. This is where buyers are at. No surprise, you see it came down. We talked about this last week. That could easily tag the 100-day moving average. Here it is in blue. And what do you see? That volume spike there? Well, there you go. Buyers were there before. Buyers were again. In fact, there just weren't really any sellers along this 4-day move back up to all-time highs. Now let's take a look at what Momentum Timer Pro has to say about this. Some of you said you really appreciated me going over this because remember, Momentum Timer Pro is still currently free, and if you get in before it goes paid, then you're going to get a one-time super low price. But let's look at the 1, 3, and 6 month momentum screens. And again, this comes out if you sign up. You'll get your first issue on Monday. It shows a minimum size on the 1 month, a mid, on the 3 and 6 month. And let me show you how you could read this report so easily. Set your chart to 30 days and saying, look, would you take a big position on a chart that looks like this? And the answer is no. And that's what it's telling you is the momentum isn't very strong over the last 30 days. Now let's zoom out to the 3 month, the 90-day chart. Why is it sitting at a mid-sized position? Because you can look at this chart and say, hey, it's trending higher. That's all it's telling you. This momentum is trending higher, and that you should be looking at this. Here you see the 6 month chart. Why it's recommending a mid-sized position? It's not the strongest momentum, but it's still saying, hey, there is upward momentum here based on Momentum Timer Pro's formula. So if you want to get signed up for that, I'll put the link up there for you to see and jump on that while it is still free. Let's take a look at NASDAQ 100. So here, let's look at the percentage of NASDAQ 100 stocks above their 50-day moving average. And you can see, much like the S&P, it's weakening as it shot higher in price. Look at how big this move in price was, and look how weak this move down here is in breadth. So that move higher in price is not being followed by all 100 stocks. And that's what's key, is you look and see participation of the index falling apart, and that is a bearish signal. Now look at the percentage of NASDAQ 100 stocks above their 200-day moving average, and that's sitting at 63%. So that's fairly weak. Now, it's not super weak, but keep in mind, if this thing continues to head lower, even if price stays elevated, but you see stocks dropping below their 200-day moving average, that is an early warning indicator of what is to come. Now, as we look at QQQ, we see price and momentum unchanged. Again, back above all the key moving averages. 1 month momentum now negative and rising. Let's take a look at QQQ, and then we'll come back and look at what Momentum Timer Pro thinks of it. Here we see QQQ, and what do you see? Clearly a sell zone sitting up here. You see a buy zone below. There's your volume profile the last 6 months, showing that there's plenty of support from buyers. And all that means is if price came down here, are these people that bought going to turn into sellers? And usually they don't turn into sellers right away. So from a price standpoint, you're sitting in the middle of a sell zone, and that's the risk. Does this go higher, or do the sellers come in next week or early into next month and drive this down, going into the Fed mid-January, increasing the pace of their taper? Now let's take a look at MTP and see what it's saying. Over a 1 month period, no position size, 3 month minimum, 6 month mid. So let's go work backwards here. Does it make sense when you look at this? So all Momentum Timer Pro is, it's just giving you a lot of shortcuts. So over the last 6 months, momentum is up, and so that would make sense. How about the last 3 months? The chart is up, but it's not that strong in its move. That's why it has a minimum position size. And look over the last 30 days. Why is it saying no position? Because it's going sideways. This isn't a chart that you see momentum behind, and that is the beauty, my friends, of Momentum Timer Pro, is it just gives you the shortcuts to the things you need to look at. All right, let's go to the Russell 2000, and that is right with the paid version of MarketCharts.com. We no longer have the S&P 600. We actually have the Russell 2000. What we're looking for here, and what do we see? Percentage of Russell 2000 stocks above their 50-day moving average, very weak at 39%. So this is telling us that either there is a major bottom forming here, or that as breath rolls over, that the floor is about to come out of underneath small caps. Let's take a look at the percentage of Russell 2000 stocks above their 200-day moving average. This is at 47, so this is weak as well. If this trend continues, again, look for small caps to lead the large caps lower. And what do we see? Price momentum bearish across the board, so that's consistent what we just saw in breath, back above the 9 and 21-day moving averages. 1, 3, and 6 month momentum now negative and rising, showing trying to find some elevation there in price. And in terms of momentum, we'll look at Momentum Timer Pro in a few minutes. And how about 9 month momentum negative and falling? Let's take a look at IWM, the ETF for the Russell 2000, and what do we see? Price came down into this buy zone, and it got slammed right exactly into the 6 month volume profile, which I believe is also the same as the 1 year volume profile. So what you very clearly see is where this red bar here is at 222. Sellers are above, buyers are below. The only question is who wins this. Breath is saying that this rally is being, or these move higher is not really much of a rally. It's only over 4 days, is really based on a smaller and smaller number of stocks. As that gives up, look for the Russell 2000 to potentially roll over and lead the market lower. Now, check out Momentum Timer Pro. What has it got? No position on any 1, 3, or 6 months. And does that make sense? And that's why this is such a great guide, is because if you look over the last 30 days, is this something you would get excited about buying into? Well, probably not too excited. If you're, unless you're a trader, this is telling you, hey, go look at something else. Look at 90 days. Not a chart to get excited about. Price has gone virtually nowhere unless you're, again, a trader, which the 1, 3, and 6 month positions weren't really designed for. And then you look at the 6 month. Is this something that says, hey, if I get in here now, am I seeing a lot of upside? No. In fact, the way you would want to read this is you want to wait until that 1 month starts now to show a positive signal in a min or mid-sized position. And that's when you start looking to scale in if you're a longer term investor. And that's one of the great ways to use Momentum Timer Pro. How about the transportation sector? IYT, member transportation stocks often lead the major equity indices. And what do we see? Momentum turning bullish on the 21-day moving average. It picks up speed and breaks across above all the key moving averages. 6 month momentum now positive and rising. That is a good sign for transportation. Let's see if this is going to be a leader or giving us a false flag. Again, everybody jumped off their 100-day moving average and went vertical. And if we zoom out, what do we see over the last year? Potential double top here. I mean, really at this point, price needs to kind of break above these tops. If it runs into those and stalls out, or if it doesn't get the momentum behind it, that is a bearish picture. It's riding off its moving averages. The only question is how long can it do that? So watch the transportation sector and look for it to run into resistance and possibly reverse itself if you're on the other direction of that position. If you like the downside of IYT, keep an eye out on that. How about the energy sector? Price momentum almost unchanged, except we see price on the 50-day moving average turning lower. Energy sector above the 9-day moving average. Not a lot of change there. Let's look at crude. I love looking at where the support and resistance are for crude, and you see support is now at 65. On the 6-month chart, let's go to the 90-day chart. It's way up at 81. You can see where all the sellers are at. I mean, if you were wondering, there they are. And over the last 30 days, they're sitting here right at 72. So you've got this battle, as we've talked about, between down here at 65 and up here in around 71, 72. I'd be curious to see as it runs into its 100-day moving average, if it gets rejected there going into next week. How about XLE? We saw this rounded top. It got rejected. Price, we saw buyers come in, got rejected, came back down, hit the 200-day moving average. Again, people love buying moving averages and get slammed right into the downward trending 21-day moving average. So remember, when price crosses a moving average to the downside and gets rejected against it on the bottom, that is bearish. So the 21-day moving average is leading lower. The 50-day moving average is curling and coming down. So they look for a potential test of the 50-day moving average, as markets tend to look at the 50-day in a much stronger way. Let's go and look at financials now turning bearish on the 50-day moving average, but popping back above 9 and 21-day and 100-day moving averages. Of course, financial stocks looking for the banks to get the green light to come back and buy their shares back when the blackout ends. And here we see that, which is interesting, that we see the 6-month volume profile line now move up a little bit. Again, this is all being supported by massive buybacks from the banks, and you see it moved up a little bit, but sellers remain right above this. So there's clearly buying going on here, but as that buying is coming in, you're seeing massive amounts of sellers turn around and selling into that. So perhaps those are your corporate insiders in the banks and major shareholders taking advantage of that. Yeah, it could be. How about industrials? We see no change on price versus on momentum above the 9 and 21-day and 100-day moving averages here as well. Let's take a look at XLI and see where it is. And it's sitting right. You see that, notice that it crashed right over, it gapped over its 6-month volume profile and then closed higher. Well, if you can't get through it, do it in the overnight. That's one way to do it. Right now, over the last 6 months, this isn't really overly a bullish picture, and sellers are right here above it at 105. So if you're looking to see where this might want to come to a stop, you can see clearly the sellers are there, but there is definitely some bullish move going into this next week. How about we continue on to the utility sector? Price momentum unchanged, slipping below its 9-day moving average. Did we get a new high with utilities? I mean, remember, it was jamming at that last week. Let's see. And what did we get? It actually got rejected. How about that? At the same spot it did right before the March 2020 meltdown. Isn't that interesting? The sellers from back then are taking advantage of this move higher in the utility sector and saying sell, sell, sell. Support remains well below there, so not much worry about that. Let's see if we can find where the sellers are at. And there you can see over the 10-day picture, look at that volume profile line. They sold the top. Let's look over the last 30 days. Nope. So clearly they were selling that top. Maybe there's not a lot of strength there in that sell, but they were there. Buyers came in off the 21-day moving average. So I would say this is probably going to make another run at it, given just the overall bullish tone that everyone has. And you can't get enough stocks. How about large gold miners going bearish on price and momentum? Above the 21-day moving average, that's good, but look at everything else. 1 month momentum negative and rising, that's not a big deal, but 9 and the 12, when you start getting these longer ones going negative, people start exiting positions. If they haven't made money in the last 12 months, they probably looking to get out. Let's take a look at GDX. And look at that. You see that it's holding this very tight line at 31.18, but look for it to make a run at 32. Look for some bullish move here going next week. You've got the 50-day moving average there. You got the volume profile line. But I would, if it does make a run at that, I would expect it to get rejected there, as it has been for a long time. And then you got the 1 year volume profile. Look at that way up there where everyone thought this was going to be the big bull market breakout, and they got sold right into. How about the 2 year is sitting right at that same level? So bulls got their work cut out for them. But I say in the short term, you've got to run at that 50-day moving average to keep this momentum going off of last week's move. Let's go on to emerging markets, not giving gold miners any hope. Price momentum still negative there below many of the key moving averages except the 9-day, 9-month momentum slipping negative and falling. People will be looking to get out of EEM for sure, because look at that. You see the 6-month volume profile sitting at 51. So sellers have been clearly above that. Let's go out to the 1 year. You see sellers clearly above that. And I think 2 years is below, and 2 years is below. So right now, price is going to should continue to go down. It's following the moving averages down, particularly the 21-day breaks through and gets rejected. So you see it cross the 21-day, confirmed against the downside, confirming against the downside. Maybe it'll get up to the 100-day or the 50-day in green. It's following them down. Below there is the 2 year where a lot of traders came in. If that breaks, boy, then it's massive risk off. But still, you look at EM and you say price to the downside. That's the trend. All right, let's move on to high yield bonds. Looks like some people giving some high yield bonds some love. I not being one of those people. 21-day moving average going bullish on price and momentum. Now back above all the key moving averages. 1 momentum positive rising, 3 and 6 and 12 negative rising. People are all over this. Let's look at what they were doing last week as they could not get enough junk apparently. And sure enough, look at that. They came in as it got below the 21-day moving average, and boom, boom, boom. They wanted some junk bonds. 6 months volume profile says, look, sellers are way above you. Let's go to the 90-day and see. 90-day, they crashed through that. So it tells you over the last 90 days, the buyers have been buying this dip in junk. Good for them. 30 days tells you they were confirming buying that dip, and 10 days should be confirming that dip. So there you go. Junk is up as people can't get enough, hitting the 200-day moving average. Maybe it gets rejected there. It's got some room to run. It could easily get up here into the 87.50 where it's been rejected previously. But man, I'm always amazes me late cycle when people can't get enough junk bonds. And then when they need to get rid of them, well, they can't. How about treasuries? Of course, we know Bond King loves duration, and as much of it he can get. Price is bearish on the 100-day moving average. Momentum still clean back below the 9 and 21-day moving averages. 12-month momentum going to positive and rising. 3-month momentum, that's a good signal. Positive, or 12-month is negative rising. 3 months positive rising. TLT, is it over? Well, we keep seeing that it hits these trend lines and keeps going higher. So it tagged this rising trend line, tagged this rising trend line, add this one in, and you can see it's fighting. There's a whole bunch of people trying to sell and buy right here. We're looking at the 1 year volume profile at 149. It just needs to get through there and break out of this 152 zone. And you see on the 6 month it's sitting right in that zone. I mean, it's below the highest concentrated part, but it's right within that range where buyers keep coming in every time sellers are there. Let's look at the 90-day, and you see it's slightly below there. It came Friday, just came, seller just crashed it right through there, didn't even hold. But perhaps buyers were saying, hey, you want to sell? I'll buy that dip. And look at that. It keeps holding that rising trend line. It's still sitting in the zone of volume profile. So it's it's not a bad picture for TLT at all. The trend is still, you look over the last 6 months, is rising. In fact, what does MTP think of that? Let's see. It's got a buy on a 1 month, no position on 3 month, and a mid. So 1 and 6 month have mid-sized positions. And does that make sense? Yeah, you look at the last 6 month trend and price is rising. That makes sense. How about 30 days? Price, I imagine it'll change that position down to mid pretty soon unless price jumps up. How about over the last 30 days, it's dead flat. So again, no position there. But again, Momentum Timer Pro just taking some of the heavy lifting off of your screening process for you. How about moving to gold? Price going bullish on that. Momentum on the 50-day flipping bearish above all the key moving averages is always a good sign. 6 month momentum positive and rising. That's great news for gold. Let's take a look and see. And there it broke its 6 month volume profile line. Still got to get through this 1820. 1820 is just every time it gets up there. I mean, it's amazing. The bulls keep taking it up there and they keep getting sold into, and they keep not learning their lesson. But nevertheless, 1820, they're going to fight through it, probably get it up into 1830 and likely get rejected. Look, the 1 month volume profile is there below it. How about the 90-day? People, it wasn't really acting as much resistance there. How about 30 days? You can see people have been buying this dip in gold. That's all you see here is this move right here in gold, heavily bought, looking to go higher. And guess what? Every time they buy into it, they keep getting rejected. So be careful. So what do we got with silver? Silver on the launching pad. How about, let's see, price momentum, saying no, but hey, it's back above its 21-day moving average. 3-month momentum is positive and rising, so that's a good sign. Let's take a look at silver, because maybe sometimes momentum doesn't tell you everything. But look at this nice double bottom here. You've got the 6-month volume profile telling you the buyers were all there. Let's look at the 90 days. What do you see? Buyers all over the 90 days buying both those bottoms. So that's what you want to see. 30 days. Look at that, buying all of that bottom. So if you're bullish on silver, everything I'm showing here is confirming that price should go higher. Now, the question is, where does it go? You got the 1-month volume profile way up here. So silver could easily get up into maybe the high 23s, low 24s before it really runs into much resistance. Some people are going to be hoping for some sort of pattern to emerge out of this. Very well, you could call this a double bottom. You could also have a head and shoulders reversal if it gets up into, say, the low 24s, even in the high 24s, and gets rejected. You could have a head and shoulders pattern to the other direction. So for the moment, to me, bullish on silver. And the question then is, what does that mean for King Dollar? Here we see DXY price going bearish on the 21-day, now dipping below its 9 and 21-day moving average. This is finally over for the dollar. Is the dollar going to crash? I know people are rooting for it, and they've got their position set on it. But let's see, look at it at the 2-year. What do you have is you see across the 50-day moving average has kind of been riding it higher. So could the dollar come down and reconfirm the 50-day? Absolutely. Could it go sideways and let the 50-day catch it? Absolutely. The sellers and the buyers are fighting in this very narrow range right here. Let's go over to UUP where you can pick up that volume profile line. And what do we see? 2-year mark. Sellers our buyers are all below this. So still very strong in terms of bottoming pattern for the dollar. How about the 1-year? Still below. 90 days. Where do we see it? Aha. So 90 days. Look at that. It's holding the 90 days. So you think, look at that. It's interesting. Let's zoom in a little more. And no, it doesn't look crashy for dollar as well, because you're seeing a lot of shares traded right below where price is trading. So you see people buying that dip every way along the way. I bet even the 10 days lower. So people are buying into this dip, and that means dollar likely to crash. I'll have to say no. And with that, we'll see you back on Monday for the show. Thanks for being fans. Bye now. The content of this video is provided as educational information only. It's not intended to provide investor and other advice. It is not to be construed as a recommendation or solicitation by selling securities, financial instrument, or participate in a particular trading strategy. This video was prepared by Steven Van Metre, reports in passing, business express video that do not affect the value of Financial Advice Inc. or Steven Van Metre Financial.